Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. We're going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report and read the synopsis on top. The dollar is breaking out to the upside once again. The British pound has dropped to a new low, and the euro is probably not far behind. So let's scroll down to see what he has to say more specifically about the euro dollar. Reading Jamie's synopsis here. Yesterday I wrote that with price staying below the underside of the triangle support line, it is possible that the triangle is completed at 29.32. If so, the euro dollar will likely break to a new low. So Jamie's been spot on with his analysis here of the euro dollar. Risk on shorts can be moved to 126.36. So if this is the beginning of the fifth wave, short trades are warranted. When I do bring up the charts, I will go over a few areas where we might look for short trades depending how aggressive you are as a trader. Now the dollar yen, as that's what we have been focusing on for the most part in my reports. Reading Jamie's synopsis, the larger dollar yen trend is down, so strength should be sold. It's unclear though whether or not the rally from 90.86 is complete. So let's go ahead and pull up the charts. The first chart is the euro dollar, and as I mentioned, let's zoom out a little bit, get a better view of the triangle. This is the triangle that Jamie's speaking about, and we can see the clear break beneath the triangle, and the losses have been accelerating since that point. So moving forward now, assuming you do not have a position on, the first area of resistance would be a simple shorter term resistance line that I've added to the chart here. The second level would be that 26.36 area that Jamie was speaking about. That's the previous high right here. That's the highest point it's made since the initial break beneath the triangle. So that's the second level of resistance. And the third and most formidable point of resistance would be the underside of the triangle if we get a rally up there. That would be the ideal entry, but I'm thinking somewhere near that 126.34 area as Jamie was mentioning, and if you're slightly more aggressive, I would apply that shorter term resistance line and look for an entry along that line. The next chart is the dollar yen. And this is the resistance line that I've been using for the past couple of reports. And we can see that this resistance line did set up a nice trade here. You can view this report, I believe it's 3 reports back. And if you're listening to this report on the Daily FX forum, you can just scroll up to view that report. And I was also mentioning yesterday how the target area would be that 96 area, which Jamie listed as the first point of potential resistance. And we can see the prices have indeed reached the target, actually falling below the 95 figure as well. So hopefully you were able to get an exit somewhere near that 96 figure, and that's where prices are right now actually. So the next chart is the Kiwi dollar, and this I was mentioning yesterday how we might have a slight bullish bias against that 50% fib. Didn't work out. If you did listen to me, you might have been stopped out, but that's okay. That's part of trading. You have to learn how to embrace your losses. And right now, again, it looks like prices might have found support at that 78.6 level. I would mention the same type of trade yesterday, but again, this is getting a little bit risky trying to pick the bottom here. The low that I'm thinking about is the 55.40 low. That's the lowest low. It's about 3 candles back now. Again, I'm recording this at 8:30 Eastern Standard Time. I might adopt a slight bullish bias against that 55.40 low. Now, the main reason is while this price action, if we zoom out a little bit, this could be the first wave or the A. This could be the B wave, and now we might get a C, which will equate or exceed that 61.26 high. The main reason why I'm looking for bullish opportunities in this pair specifically is the SSI. And if we go back to Daily FX, something that you should incorporate into your trading day, each and every trading day, go ahead and click on Forex Trading Signals on top. Bring up the SSI, which is located on the menu on the left-hand side, And one of the main reasons why I'm adopting a slight bullish bias on the Kiwi is the negative ratio in the SSI, and it's near extreme readings. An extreme reading would be -3, -2.44 is pretty extreme, obviously not at its most extreme, but yet it's still giving us that bullish signal. So that's what's making me lean a little bit in the direction that this could just be the bottom of either the bottom of a B wave or the bottom of wave 2 in a bigger correction. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.